Hi, this is Harry Feiner with William Raveis Real Estate, the Feiner team in real estate, and here in Glastonbury, Connecticut. I'm here with another chapter in our series of videos with the Feiner Video Network. And today, Paul Adamo is with us. He's the executive mortgage banker for William Raveis Mortgage here. Hi, Paul.
Hey, Harry. Thanks for having me today. Appreciate it.
Thanks for joining me. So one of the things I've been sharing with a lot of people that are renting is that you can actually buy a house and have a mortgage for less than you're paying rent. And some people would scratch their head and say, how's that possible? Well, I'll add another piece to that too, is you can get it with no money down. Yes, it's almost like 2006, except now it's much more regulated. So Paul, what does all that mean?
Okay. So first time buyer, we can go with the CHAF loan, Connecticut Housing Finance Authority. It could be up to 105% financing, 2 mortgages, but your second mortgage would cover your down payment and your closing costs if you're eligible. There are some restrictions to it, like income limits. There are sale price limits, but a very attractive loan with low rates.
Wow. And we mentioned low rates. What's the current rate?
The current CHAFA rate, now CHAFA has 2 programs. They have a government program or an FHA style program that follows FHA guidelines, which is 3.375%, so
wow.
under 3.5%. And for the conventional program, they call it HFA, that is 3.875%. So below 4, just low rates, something you really can't beat.
So this is for a first-time buyer as well?
Yes, this is actually a first-time buyer program, and it's first-time buyer could be somebody who hasn't owned a home in 3 years. So if you have not owned a home in 3 years, you could be considered a first-time buyer again.
Are there income limits?
The income limits go by county. So each county has a little bit of a different income limit to it, and it also goes off of family size. So a family of 1 or 2 will have 1 limit to it, and a family of 3 or more would be increased for the limits, for the income limits.
Okay. And what about a credit rating?
Credit rating, it's hard to say because it is a program that's really not built around credit rates. If you do have a lower credit score, it's probably better to go with the FHA type of CHAFA loan. And if you have a better rate, it's better to go with maybe the conventional type of CHAFA. But it's not a credit score driven product.
And CHAFA stands for the Connecticut Housing Finance Authority?
Yes, it does.
Good.
Yes.
I'm glad I got that right.
Yeah. So it's a state program, but does follow guidelines of, like I said, either FHA or Fannie Mae guidelines, depending what type of loan we go with.
So if you're renting today, why not own? When you rent, the money, you never see it again. There's no residual for you. When you buy a house, prices usually go up, and they will go up again. So you're investing in your future, as well as you're not actually spending money that you're not going to see again, because you're building equity in your home. So again, if you'd like to contact Paul, you can contact Paul through me, and that's at 860-FINER for you. That's FINER, the number 4 and the letter U, and thanks for watching today.